Welcome back to the channel, everybody. Today, I am joined with my colleague, Elliott, and we are going to go over the ever prominent question: is the market still correcting? Today, we're going to find out. Austin, thank you for joining me today.
Yeah, always a pleasure to be talking with you over the Google Meets here, Logan. I enjoy it. So yeah, we have some juicy stuff to talk about today. We're going to be talking about we're going to be looking at SPY, which is the S&P 500 ETF, but in general, we use SPY, we use this chart as an indication to kind of gauge overall market sentiment. So when I refer to the market, I am looking at SPY. I know this could be kind of looked at in different ways, but yeah, the S&P 500 ETF is what we're going to be looking at and observing today to kind of see where we are in the market and kind of where we'll be looking to go in the future. So there are a few things to talk about here. Obviously, if I bring up my drawings here, it is possible that we have seen a conclusion to this correction, okay? And I know we talked about this a little bit, Logan, off the air. I mean, I know that you have your thoughts on it, but this last borderline capitulation that we saw down to 410 on SPY was very, very aggressive to the downside. And seeing this quick pivot to the upside is very reminiscent of some sort of macro bottom. And I think you would perhaps agree with me on that.
Definitely.
Yeah. And you know, there is a valid wave count. We do have an ABC downwards right here, which was our wave A. We did have a correction to the upside, a very clear ABC correction to the upside, which is our wave B, and then a rather, a kind of a choppy, very extensive wave C to the downside. And this, we did make a new low. We broke below the bottom of our wave A, and we pushed down to 410, which from all-time highs was roughly 14.5%. So, we didn't quite get that 20% correction that we were looking for, but, it does look to seem, it does look as though that we could be done correcting here. And, though we're not out of the woods yet, I definitely will be looking for some potential more upside in the short term. Obviously, we can go on to acknowledge some macro technicals, but the wave count right now in smaller time frames is viable to be done correcting. Obviously, I said we're not out of the woods yet, and you might be wondering, well, Austin, why are we not out of the woods yet? What makes you think that? Well, on the macro scale, if we go ahead and zoom out here, let's say the 4-hour, and we observe this entire bull market that we kind of had from, or that we did have from our capitulation back in March of 2020 all the way up until now. When you overlay some very specific moving averages, that being I believe this is the 20-week moving average, and then the 30-week EMA. So the simple moving average is the 20, and then we have a 30 exponential moving average. This really was, the support band that we've been riding on through this entire bull market, right? I don't really like the term bull market, but this is what we've been.
That's a bull market.
Right. This is what we've been using as support to really sustain a large macro move to the upside. And you can see ever since we kind of capitulated, we got back above these very strong moving averages, and we found them as support here a few times. I'll make my marker green. We found a support here, so 2, 3, 4, right? We had that correction back in September that led us back down right to this band. We got a very nice bounce off of it. But something very interesting happened recently. We actually went below our significant moving averages, and then we acknowledged it as resistance, right? So support flipped into resistance. That is typically a very, very bearish sign, right? This level at around 457, 458 was a very crucial level to get over. And, SPY was unable to get above that recently, and that is inevitably what led to our lows of around 410. So when I say that we're not out of the woods yet, though we do have reasons to think that 410 level was a bottom, I really will be looking for SPY to really confidently break above that 458 level and get back above these significant moving average bands. That's going to be really big for us, and I think that will indicate that we are, perhaps on our way back to price discovery. It may not be as quick as everybody thinks. I don't think it's going to be like a slingshot effect. Keep in mind, we have seen SPY do many V-shaped recoveries. One happened recently in 2020. One happened in 2018, and then I could go even further back, right? We borderline V-shaped recoveries in 2015, 2014. SPY really likes to do it, or I should say the S&P 500 loves to have these V-shaped recoveries. So it's not out of the question that we could be, we could shoot straight back up in the price discovery. But when you acknowledge all the fundamentals going on, such as the international conflict, what's going on with interest rates, what's going on with just overall monetary policy, especially on a government level, right? It leaves a lot of questions and a lot of concerns, and overall just a ton of uncertainty. So I really will be acknowledging the price action as objectively as possible. And on a macro scale, I will be looking for a break above that 458 level to really get bullish on the market again. But even that may not indicate that we're done. We can obviously continue to chop around and do whatever it wants to do, but it's very clear right now. We were in this very, very aggressive bull market that really shot us straight into price discovery, very deep into price discovery, and we're no longer in that same trend right now. So we're in some choppy territory, but it does look good. That recent move that we had to 410 with the bounce back that we had is very reminiscent of a bottom. So
definitely is. If you don't mind going into the 1 hour chart.
Yeah, of course.
But I love what you were just saying, how it is uncertain. And although we are trying to objectively view price action as well as we can, there's no complete, we're not entirely sure where this is going to go still, right? There's a lot of uncertainty. A lot of the waves are moving strange. But I do completely agree with you. We had a very impulsive, engulfing move off of that low after we gapped lower to 410, which is a sign, like you just said, of a reversal. Of a bottom. Absolutely.
Yep.
And then something that also confirms that for me is the fact that we had a 3-wave move on the micro time frame right after we made that first impulse move to the upside, followed by a break of that local high as well. So to me, what that tells me is that impulse move off the low was wave 1. Now we're potentially looking at wave 3 because wave 2 just completed when we're utilizing the Elliott Wave framework.
Right. Awesome. And if you and this is just to visualize what Logan said, right? We could be in store for a very aggressive, right, V-shaped recovery being led by a 5-wave impulse move to the upside, right? It would look kind of something like this. And as we said, SPY is no stranger to making these V-shaped recoveries. I have another interesting fractal to show, just kind of to consider here. Back in 2018, right, I was saying how important these moving averages were. In 2018, we actually did have a pretty gnarly 20% correction. I believe it was 20%. Yep, a little bit, 20.5%. And you can see that we actually dove down below these moving averages, which maintained, a bullish sentiment in the market until we dove down below it. And then we ended up rejecting it and securing it and acknowledging it as resistance. And that inevitably led to a very, very aggressive push to the downside, which led to this 20% correction. It's pretty interesting. If I go over here and I were to take a bars pattern and I were to overlay this move over our current market, our current price action, there are some pretty shocking similarities. Maybe not so much after our move down to 410 because we're not going to be getting kind of that triple top against our moving averages, but still nonetheless something to consider and it's rather interesting. And we'll overlay this right here. Yeah, you can see that. That's pretty interesting right here. What's the differences, right? I said that move down to 410 obviously deviated from this correction that we had back in 2018. There was a chance that we could have gotten, bought up a little bit earlier to come back up to test this high, 454, 455 range, and then come back down for lower. But, we ended up going a bit lower, and, we're coming back up now. So we could still see something like this play out where we, come back up to that 455, 456 range, and then inevitably make a new low. But since we did, make that low at around 410, it looks a little bit more unlikely. But nonetheless, something to consider,
Definitely something to consider.
Yeah,
I am still looking, if we do move lower, for that price level around 408 to 404. But as of right now, until we see further developments in price, we do look more bullish than bearish.
I agree. I think it's going to be very difficult for us to retrace this entire move all the way back to 410. I don't really foresee that happening. I think the chart would look very funky if it were to do that, especially in the short term. But it's absolutely possible, I suppose. Things do look rather bullish right now. So, yeah.
Awesome.
Got to keep our eye out for that. That 458 level is going to be key for us.
It's definitely key. Once we break that level, I would almost say that we can, definitely start looking for our first macro impulse wave after this correction.
Yeah, absolutely. And that would probably reside, in the latter half of 2022. And that kind of lines up with our hypothesis with cryptocurrency as well, right? We're still very confident that Bitcoin has another leg in it that we could see or should see all-time highs, whether that be in late 2022 or 2023. But I do think that move that Bitcoin makes and that we've been very confident about, I think that will correlate over with the equities market. And I think we'll kind of see another leg up in really all asset classes per se. Maybe not all of them, but we could see another very bullish time in financial markets for sure.
Definitely. We just had Bitcoin move 15% the other day, and we were just talking earlier. And SPY definitely does like to do a V-shaped recovery.
Oh, so, it does it all the time.
Yeah.
It does it all the time. Yeah. So It looks good. It looks good. I guess the conclusion of this is keep an eye out for that 458 level, 459. We'd look for a confident break of 460, and then that would be a very strong indication to us that, hey, maybe it's our time to start heading back higher, and this correction was maybe a little bit more brief than we expected.
Awesome. Austin, thank you very much again for coming on.
Awesome. Yeah, that was a great talk, Logan.